Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for Tuesday, June 12th, 2018. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll notice here that the ES continues to push higher overall, continues to push beyond that 2741.75 key level and drive into the 2791s now, which is the upper 25% level. Keep in mind, this level right here has been the level that has been offered the last 4 times that price has been in this area. So we got offered through it in this zone here down, here on the retest back down, and here back down. So now anything beyond that level now could be seen as an opportunity to sell at the best price of the year so far outside of these 2 weeks. And that could lead to a return right back to 2703. Again, that level right there has been bid ever since a change of bias occurred here in early May, and that could lead to at least a little bit of sideways action within those 2 pivots for a little while. Now, so again, we are at the zone where it's the earliest opportunity where we could see a reversal back across into the midpoint. However, usually I like to see failed new highs, failed new lows, which means that's the high right there. It would be best to wait for a push into that high and then a failure before we see that return back down. So that's one thing to consider. We're at the earliest point where we could begin to see failure, but at the same time we haven't really gotten to the edge, which is my preferred area to see failure. So I believe we still have a little bit more upside. Tomorrow is the FOMC key level that we've waited for here. So FOMC key level tomorrow. These markets could basically go sideways and build up into that event, and then once that event occurs, it could release some really good volatility. So we'll keep an eye on that as it approaches. Alright, here taking a look at the NQ right now. You'll notice in the NQ we're seeing similar type of price action. For the most part here, you're seeing price hang around that previous high, that 72.14.5, hanging right around that zone, not really getting much traction beyond it. Still holding above the 7,000 level though. Again, that's what I mentioned before. If we bust above 7,000, we go at least 200 handles into 7,200 with a shot to see 300 handles. So we got those first 200 handles, which is what we were expecting. Now we'll see if the market needs to get above this high by a certain degree before it may muster up another round lower. Every time we've gotten at these highs, we've seen a bigger and bigger correction. So again, are we going to see a correction here back down, which could lead us perhaps back toward recent lows? That could very well be the case, but at the very least, in that type of scenario, I wouldn't overshoot it too much. I'd probably just go to the 66.53, which is the breakout point. Anything beyond that would just be added bonus. So we'll be keeping an eye on this. Again, very similar to ES, I believe more upside in the short term, but we're getting to that point where rejection could be seen, and we may build out heading into that FOMC key level, which could bring some nice volatility. Alright, taking a look now at crude oil. Now crude oil starting the day with a failed new high. So far, but again, early in the day, price is still above the midpoint of the previous session, but it tried to make a run of it above 66.29 and is currently failed above that level so far. So this has been a level that has been a battle zone for quite a while. If I stretch it back, you can see how the market has responded to that level time and time again. And right now we have still that rounded bottom that's developing. We also have kind of an upward sloping channel, perhaps a bearish flag that's developing there. Again, this is a market that could continue to see this type of behavior heading into the FOMC key level, and from there we may see some pretty decent movement. So we still may have some volatility to come. Right now showing initial signs of weakness, but really it would need to push below recent lows to really start to break this thing down. So as long as 65s remain intact here, we still have sideways to up to go heading into the FOMC with a shot to see some big movement. Again, if we do break and hold above 66.29, it's an easy shot to get back to about 68.70, the recent high. Any overflow might take you as high as 70, but that's at least back to the pivot range high up here, back to the target range. But we have a high probability target zone between 68.90 and 70.35. Alright, taking a look at the YM. What you'll notice here in the YM is we've had a good swing higher beyond the previous high, and we've been holding right above that previous month's high for a while now. We have a very narrow inside range day today. And again, what I mentioned before, after this pinch and breakout, any pullback into this zone, say 25K, could be an opportunity for bulls to defend and stretch it to the recent highs at 70.85s. So basically that could be a good launching point. This one's not quite at the edge like the ES or the NQ is. The YM still appears like it has more upside to run. It's very similar to RTY, which just continues to push higher beyond its recent key range highs. So this is one that looks like it still has more upside. If there is a pullback here, it could be a buying opportunity for a shot at getting between these two key pivot levels, which is about 25.5 to 26K. So it's a pretty good target zone, right smack around that nice 785 level. So we'll keep an eye on this, but overall still trending higher. Lastly, let's take a look at ZB. Haven't looked at ZB in a while here, but for the most part what we have is a key range here, which spans from 146.27 down to 141.16. Your midpoint here 144.06s. Basically nice failure below that key range low and a bounce. Price actually went up and formed another key range high and pulled back, but for the most part we're back into this key range. And so this boundary right here, after rejecting the 25 here and dropping, then rejecting the midpoint here, we've compressed enough now to where we could see a breakout from this key range. And ZB has mostly been going down for quite a while. So again, if this one can't hold, say 141s here, it could open up much more downside ahead into 138.26 and 136.05. Those would be the downside targets in that scenario. So we'll keep an eye on this here, but it continues to build out within that previous key range, and we could continue to see that development off those levels until expansion occurs. Alright, that is it for now. Let's see how this plays out heading into the rest of the session. Good luck and trade well.